Nifty. Manish Sonthalia is the market master of the day. He's Chief Investment Officer at Emkay Investment Managers. Manish, good to have you with us here. Good morning. Thanks very much for your time. So how are we set up with the fall that we've had and all the events in front of us? Would you say a bulk of the fall, at least at an index level, is done?
I think another 5% on the downside and we'd be probably done. I think markets won't sustainably be there below 22,000 for a very long time. All the negatives are largely known and is being priced in the market slowly and gradually. But below 22,000, I think there could be earnings comfort, whatever 10-12% earnings comfort on the Nifty 50 for 26. That's part of the course. And valuation of 17-18 times is doable. I mean, last 10 years average valuation has been 17-18 times. So I would think at the index level, Nifty 50 level, you could see some buying support coming below 20,000.
That's good to hear. That's good to hear, Manish. That maybe we're probably at the bottom of the pit now, and it gets better from here. So you're saying that at around 22,000, given the earnings projections right now, we'll be at 17 to 18 times. So let's take that earnings piece as, up as well. FY26, I'm not talking about FY25. This has been a write-off year anyway. FY26, what are the kind of numbers that you're working with at this point? Give us some sense on the recovery and what makes you hopeful that eventually this trough will move higher.
So FY25 probably will end Nifty 50 EPS levels of 1075. And you add another 10% to that, that's 107. And you add another 10% to FY26 numbers, and you get to a level of 1315. So on the average of FY26 and FY27, you broadly be at 1250 on the Nifty 50 EPS. And you give it a valuation of 17 to 18 times, you're broadly there at 22,000, 22,000. Last 10 years, median valuation has held at around those levels. I think we'll fall to those levels, given the state of negativities that are surrounding in the market. And from there, it is going to be pick and choose on the Nifty 50 numbers. Companies that will deliver good numbers are likely to find support. Companies likely to report better than EPS growth estimates of 10% will likely outperform, is what my understanding.
Hi, Manish. Good morning. Good to see you in. So, 5% from here will take us down to the 22,000 mark that you're talking about. My worry is with regard to the broader markets. Now, that's seen a crunching blow. We're not talking about 8-10%. That could be only the headline index. Stocks have fallen 25, 30, 35, 40% as well. Maybe some of them ran up ahead of themselves. What's your view on the broader market? Still more pain to go? Or do you think bulk of it is now getting factored into the price?
So, Nigel, at the index level, it should not be coming as a surprise to anybody that valuations were deviating 1.5 times standard deviation away from the mean. And in extreme euphoric times, even in the past, such sort of valuations for the mid-cap index and the small-cap index were never seen. Of course, we can discuss that, individual names would have merited elevated valuations and so on and so forth. But for the index as a whole, I mean, that is what is giving me, right? And even now, the valuations really have not come down to historical averages as far as the mid-cap and the small-cap numbers are concerned, the index level. So that is what is correcting, and obviously there will be individual picks which will be outperforming the index and some will be laggards. But I think broadly that is what is playing out. It was elevated, valuations didn't match up to historical averages, and it's just meandering and reverting back to the mean.
Manish, what will you buy? But people are saying this dip is a great buying opportunity for a longer-term investor. What do you think has come to those levels that you like?
Yeah, so medium-term and long-term story of India still hold good. Short-term is a bit of a pain. And I think I have reiterated in the past as well, currency depreciation is the theme for calendar year 25. Buy export, buy banks because they're extremely cheap, buy health insurance and all those plays, and buy capital market-related entities. They would relatively outperform given, the growth outlook that you have for the medium-term and certainty about it. And the rest of the spaces, it's a lot dependent on policies, currencies, when you come to import-related stuff and elevated valuations. So I think these are the areas where you can hide on a relative basis, which will likely do better than the rest of them.
Yeah, no, you can hide, but You can't. But anything where you make money, hiding is one thing. Manish, talk to us about a couple of ideas. You're a bottom-up guy. I mean, with full disclosure, something which has fallen enough and where there is value. One or two names, which gives us a sense of how you're thinking about things. Yeah.
Yeah, so Prashant, I think there's a lot of value in health insurance companies, and you know the names broadly. You know they are at very beaten down valuations. You were discussing one of the names earlier during your conversation before I joined in. You know, these are some of very exciting plays and available at very reasonable valuation. You will have a case of commissions across the health insurance companies coming at par today. Care Health is paying high insurance commissions. Then maybe a Star Health 1 year down the line they'll be at broadly the same levels. You are looking at 20 to 30% sort of a growth out here. You are looking at prices which are at 2-year lows. There's adequate margin of safety. When it comes to large cap banks, of course, you have pain in the retail NPA credit cycle. Tier 2 banks won't be able to handle it that well as the large caps. And today we are talking about large cap banks, both in the public and the private sector, trading at less than 15 P multiple. There's ample comfort out there. Pharma, in any case, both on the generic export side, domestic CDMO side, export CDMO side, the runaway is big. And depending on how each individual company reports numbers, there's a lot of play and value out here. And of course, your platform companies, you have the Zomatos of the year. The numbers were not good. Profitability was an issue. But I would still believe that, on a medium term basis, it should be good.
Okay, all right, Manish, always good speaking to you. Thanks a lot for joining in. As you said, 5%, maybe at the maximum on the downside on the headline index, but individual stocks and themes is what you like.